All right. We're live.
Awesome. On YouTube?
Yep.
Okay, cool. Poor guy is trying to join here. Just trying to warm everything up. How's everyone doing? Everyone having a good week so far? Your accounts are surviving?
Good morning, everybody. Good morning.
Chris! Morning, buddy.
Hey, brother.
Let's see. Just trying to make sure I'm staying on top of the waiting room. Let me actually turn that off somehow. How do I do that?
Everyone having a good week so far?
Here we go. No more waiting room.
Perfect.
Not having a bad week.
Uh-oh. What's going on, John? What happened?
Hey, how's it going? I'm driving, so I'm not going to be able to participate too much.
Okay.
Just going to listen.
Are you able to follow us in? Like, what's going on with your trading?
Well, I was trading a demo account for the end of the year, and up until recently, maybe like 2-3 weeks ago, and I'm going to start with a larger amount in about 2 weeks.
Okay.
Well, I'm going to start with 500 instead of just 100. Because I was listening to you guys' video last week, and I think the problem with the $100 account is that I don't respect the money to make the right decisions and stay on track. Because with my demo account, I was starting at 3,000, and I did real well with it. And it's like, maybe seeing the bigger gains monetarily makes a difference psychologically for me. But so I'm going to try again and see how it goes.
Yeah, I'm certainly back and forth with that because, like, you should be able to manage a $100 account. This is more towards, I think, the way Sharma leans, where it's like, you start with a smaller account and you try to build that. You try to build that. Don't focus on the money. I'm always talking about that as well. But there is that tendency where you don't respect that $100. You don't respect the $200, right? Even the 500 or $1,000. But I really think that the lowest you should start with, where you're able to manage the money and not really think about the money too much, where you're making, not 200, but $20 if you're trading with like $1,000 account, making $20 a trade if you're making 2% a day. So it's you should be able to focus on that for a couple months, right? If you're able to grow that and you're able to focus on the skill every single day, not focus on the money, throw that away, right? The money will come. You can always get like a prop firm if you want, if the money's an issue for now, but you're focusing on the skill and you're building the confidence. Once you could do that, then you'll be able to risk more. Then you'll be able to see more money on the line because your skill is there. But just, focus on what can you do? Like $1,000, $1,000 account? Yeah, I would focus on that and just build the skill over the next couple months and focus on this quarter right now, building that account. Don't, focus on the discipline. That's the main thing. And I know it's a lot easier said than done, but for the sake of your account and your career and your confidence, it's got to be done. Like, you have no other choice. So, put your back against the wall.
I can feel it getting better.
What was that?
Sure. I can feel it getting better for sure.
Of course, your eyes are getting clearer. Yeah, when your eyes get clearer, you start to get a little bit more confident because you're seeing more setups and you're seeing the setups that you like on a regular basis. And not only that, when you're back testing, you're seeing that setup a lot more, so you get more confident that you can wait for it in the live market because it's coming. Yep. Right? If you don't see that setup enough, you're not going to think it's coming, and you're just going to be taking any setup that presents itself.
I think my biggest issue in the last 6 months was my time for trading because I work nights on the East Coast. So it was real tempting to trade Asian and London session, but I'm trying to just watch that the last couple of weeks and just pay attention or look for trades during New York. And it seems to be doing a lot better.
So are you back testing your session? Is that what you said?
I need to more.
Yeah, that's a lot of people, let's say you bought a simulator, right? Like SharmaFX. People tend to back test, like, just press play and back test the whole thing. You got to be back testing your session. Fast forward to your session. And because each session is different. It's got its own personality. It's got its own moves. It moves differently. Focus on that and build your stats and your data from that session, like the New York session, if you only focus on that. I think you just mentioned something about the London.
Yeah.
Okay, yeah. So you do trade the London session.
I'm trying not to unless there's news.
Okay.
Like fundamental news.
So then New York is your only one?
Yeah, that's what
okay,
I'm,
yeah.
that's what
So
I'm doing
just
right now.
backtest New York session over the last like 6 months, and what are your pairs?
GBP, JPY.
Okay, yeah. So make sure that you're backtesting your main pair, and you get to know that thing front and back, like as well as you know. You want to be that go-to person when people want to ask you about that certain pair, right? It's not, like I said, it's not so much of like the ego thing of like, oh, come to me, I know everything about this pair. It's just like it, and it's gonna build a confidence for yourself on the inside that feels pretty good, and people are gonna like that.
A few things I want to add to that real quick is very first thing about the simulator. So exactly what Stefano said, but another approach that I personally take is I figure out going into the simulation session what's my goal, right? If you struggle with, let's say, entries, for example, is something that we get a lot of questions about. So if you struggle with taking entries, or you're not sure of the setups or whatever the problem may be when it comes down to entries specifically, like go into the simulation session with the purpose of figuring out exactly what kind of setup are you looking for, right? Even if you want to mix it up with, I'm only going to look for a specific setup in New York session, then go with that. But I personally just kind of keep it generic, just to collect that initial data of what is my setup and how many times does it show up in one day, right? Let's say you're only trading a Monday, or let's say you're only trading a Tuesday, or if you're only trading a Wednesday, right? And then I would look at, okay, well, how many times does it show up in the week? And then I go from there, and then I start. Now you have this database of how many times does your entry show up, your setup show up, quote unquote, in the day or in the week, right? Now you start narrowing it down. So now what's your next step? Usually I would go with risk management. Yeah, I figured out my entry, how to take the entry, but what's my risk management strategy going to look like? Right? Am I going to start closing 50% if the trade moves in the opposite direction? And how many times does the trade actually work out in my favor after I close 50%? Or how many times does it actually end up going against me and I made a good decision about closing 50%? Right? So collecting data about that. And then I would narrow it down even more, or like add on, I guess, to that, and then start looking at, well, how many times does my entry show up in whatever session that I'm trying to trade in, right? And then does my risk management strategy actually fit that in that session? So 100% your risk management, or the way that you take your entries or something like that, is going to be slightly different depending on the session that you're trading. Because, for example, Asian session is going to be a lot slower than New York and London overlap, right? So then how would your entries look like at that point? Maybe you could take an impulse trade in the New York and London overlap, but you can't take impulse trades in Asian sessions because it's so slow, right? Maybe you get caught up in a lot more fake outs in Asian session. So I would try to take that approach. Always figure out what's your goal going into the simulation session, and go into the simulation sessions with the mentality that I'm here to collect data. And you're doing the same exact thing in the live markets. So when we do simulation sessions, when Stefanos does simulation sessions with his team, when I do simulation sessions with my team, when we do simulation sessions here on YouTube with everybody, it's the same exact thing, right? Because we see the same exact setups in the live markets, and we break them down for you guys as well. So the setups and the risk management strategy and all that stuff that you guys do in the simulation session, take that seriously. Don't think of it like, it's just a simulation session. If I were to press X right now and then come back into it, the money is going to already be there. Yeah, it is. But what are you really gaining out of that? Right? You're just cheating yourself. So you treat that as if it was an actual live account, because that's exactly how you're going to behave in the live markets. If you treat it like a joke and then you come onto the live market and try to do the same exact thing that you did in the simulation session, it's not going to work out. Right? You will see the same setups, you will do the same risk management strategies, because the data in that simulator is coming from the live markets.
All gems right there. I would honestly go back and watch this back.
Mm-hmm.
if you didn't catch all that, or you want to take notes, stuff like that. Kat has a question for you. Do you record this on a spreadsheet of sorts as well? Like when you're back testing, Sharma?
Yeah, you can, or you could just do it on Trello. Yeah. Right? Just take screenshots like you would on the live markets, and then just create like a card or something on Trello that says like simulator or something like that, and then just do it on there.
Yeah. I love Trello specifically because you got everything in there. It's like a one-stop shop. You got the screenshots and all that. I never understood people backtesting and just having like an Excel spreadsheet and it's just all numbers. I couldn't do that. I need to be able to train my eyes to be able to, see things regularly and then go back and review it and take notes on that Trello. You can write down notes in the description section. Now, the only thing is, what you also can do on the side, what I like to do when I'm back testing specifically by myself, is I'll have like a legal notepad, and I'll be taking tallies for certain things that I see and how often I see it. Just like little tallies on the paper. It's nothing organized or nothing like that. It's just like little notes I'm keeping to myself, or I'm just writing down a little thing that I noticed, stuff like that. But most of it is all going to be in Trello. So.
And then
how was that, John? Did that help you?
Yeah, and then the other thing, real quick, John, that I was going to say was, with starting off the small account, exactly what we were talking about in that video with the secrets of trading. Pretty much the same thing, whether you start off with a small account or not. Just dedicate, this quarter itself to a specific goal, whether it's just to, like Stefano said, it's all about like your skills and all that type of stuff. So don't focus on like a number or something like that, but focus on actually acquiring, okay, in the session, in New York session, in London session, Asian session, this is what my setup is going to look like, this is what my risk management strategy is going to look like, and back test that, right? January is almost over, so you only have 2 months left, which obviously is not a long time because look at how quick January went by. Right? So do that and then start applying that into the live markets and all that type of stuff the rest of the year, right? But throughout the year, just have those goals. Approach it the same exact way that you would approach the simulator, what we just talked about, right? Approach it the same exact way. Every quarter have a goal of what are you collecting data on. So the first month, you're going to collect the data, right? And then you're going to make mistakes. That's always how the first month. That's how it goes. The second month is really when you start learning. You're like, okay, well, I start to see this a little bit differently. And then the third month is when you finally quit those previous habits that you had, because now you've seen the results in month 2, right? And now you could see yourself growing in month 3, slowly by slowly, and that kind of boosts your confidence. In the first month, no matter what you're doing, people are always going to make mistakes because you're always going to, for whatever psychological reason, revert back to things that you have already been doing that doesn't work. Right, so give yourself the time span of those 3 months.
I was listening to a podcast yesterday, and he was describing it as like playing baseball and just taking every pitch that you get thrown. Right, so you're just taking every pitch. Everything is coming, curveballs, flat balls. Everything is coming, fastballs. Now, in the beginning, you're just going to take everything, but as you get more experience, let's say you're in the league, you get more experience, you start getting selective over those pitches that are coming. Very much alike. We were during our live session yesterday, we were joking around about like trying to use analogies for different things and like how hunting is so similar to trading and how you're just sitting back and waiting on what you're hunting exactly. Is Donnie in here? Donnie's a big hunter. Oh, we got Peter in here. Good shit. What's up, brother? Cat, Chris. What's up, buddy? We got Devil in here. Carlos. What's up, boys? Giovanni. Yeah, Donnie's in here. Cool. All right, let's get into the charts. So, as you guys know, FOMC day, right? Where are we? So we got FOMC coming out today. You got Canadian rates coming out as well. So we'll see if they do anything. That could be a surprise move. I wouldn't be surprised if that happened. But the main mover, what everyone's been waiting for, why we've been having pretty much consolidating markets all week, is FOMC. This is what you guys wait for every single month. This is the main fundamental when it comes to trading currency. So just keep that in mind. You want to stay calm. You want to stay composed all throughout the week before that happens, because if you end up trying to trade that consolidating market all week, you end up, let's say, down 2-3%, and then you can make some moves during FOMC or after FOMC or the week after, and all of a sudden you end up break even for the week. So it's just better off not to be trading before FOMC as much as you can, unless you see your setups. You see clear setups and you know you have volume. But with that being said, that's what we're looking at for today. That's what we're waiting on, and that's not going to be happening until 2 p.m. So we could very well not even get a trade today, right? During this live session, but we're going to be preparing you so that you guys are all ready for this to happen if it does happen, if we get anything moving. So we're just going to pay attention to what Powell says today. We'll be talking in the group as well for when that happens. Unfortunately, I'll be on the road as soon as that happens. So, we'll be talking. But let's go over to the charts right now. And what I have is, I always encourage you guys to erase your chart and start over. It's really good to just, you can leave like a higher time frame skeleton on there of like the main things going on the monthly. But anything below that, you just erase really. Like a level like 156, 149 flat on GJ. We've been stuck in this range. We have our bullish trend since the beginning of COVID. We have this multi-year downtrend that we've been in that it looks like we're trying to break over here. All right, you guys have been trading with us quite a while on YouTube, so you know how we're looking at the market over here. We have our base right over here, our support, supply zone over here, our demand zone over here, where prices just been bouncing off for the last couple of years. So looking at our specific range over here, we finally reached 156 back in May, right? Tab 156, reached our previous highs up here. And then we ended up coming right back down to 149 to hold the support at the previous candle body highs over here, right? Then there were rumors that Bank of England was going to increase interest rates, right? So that shot us right up to 158 up here, right? But we never closed above 156 because they didn't actually increase rates, right? Buyers came out of the market. This was all sentiment. Buyers came out of the market. We retraced a little bit, right? We then ended up coming right back below 156, and then they ended up not increasing rates with the surprise move. So that shot us all the way back down to 149. Then what they do? They actually increased rates, right, with another surprise move, because in November, they said, we're not doing it now. We're probably going to be doing it in March, just like the Fed is right now. So right now, what you had was a nice spike up, correction of that move, and we came right back up to 158, right? But now we're rejecting it again because of the global equities, because of inflation, because of everything going on right now, because of Brexit. Maybe everything going on with Boris Johnson right now could be, having an impact to that. Because guess what? If he drops down, or if he retires or resigns or anything like that, you're going to see GJ drop as well, right? Well, actually, depending on how you look at the politics of it, maybe it would rise, but you don't know. So let me just put this right here. Anything else you want to add on the monthly?
No, it's just those two levels. Clearly, as you're approaching those two levels, you want to be very careful because fundamentals have been very, very important. Price taps into these specific areas and look at the volume that every candle has, especially the last 3 months, right? It's a very nice sell-off. Obviously, as you drop down to lower time frames, you're going to see those lower lows and lower highs and higher lows and higher highs being formed. But on these monthly candles, they're pretty good volume, right? And so you want to make sure that you're being very, very careful as you're approaching these areas. If you're sitting at let's say 155 point 700 or something like that, you'll only have a certain amount of pips that you can target when you're coming up to 156, right? So don't be overly optimistic thinking this is the break. You clearly need to wait because the market has obviously been consolidating here, collecting orders, and when's the last time that you saw something like that happening in the past? Right around this area, right? And then what happened? You had fundamentals coming out and then the volume driving. So it's very, very important that you wait for fundamentals when you're in these zones here.
Absolutely. And I'm sure most of you guys are technical traders just reading the chart. The way we just broke that down with these candles, that's how you know what's going, why the moves are happening when you pay attention to fundamentals and understand what's going on in the background, it helps and it adds confidence to you. Like, you guys want to know how to increase lot size, stuff like that. The way to do it is getting more confident in the market. Not overconfident. That's a different thing. But when you get confident in your strategy and your edge in the market, that's gonna add to your risk aversion in the market. So the more you know, the more confident you're gonna be.
Yeah, I gotta say, fundamentals is something I've largely ignored in my last 3-4 years of trading, and understanding it now and seeing how it can really break you through these key levels and stuff. It's definitely changed my outlook and perspective on my entries and the zones where I'm drawing my zones and whatnot. So yeah, I'm trying to get a lot more into it, man, and I appreciate you guys focusing on it, because it's something that, like, previous coaches and previous courses I've taken, it's like, you're a technical trader, just basically ignore fundamentals. And I can see how that kind of set me up on the wrong path.
100%.
Another great point. Donnie, yesterday you did that too. It's sick, like I said yesterday, where you have a trader up and coming, right? Well on their way to what they want to be accomplishing with. Say what they were struggling with and how that has helped. That helps so many other traders. I hope you understand that. So many people watching this, that's going to help them understand how important fundamentals is. Because it's one thing hearing that from your mentor, but then hearing that from somebody else too that really is benefiting from it, it goes a long way. So with you saying that, I was the same exact way, Donnie. Like, my original mentor wasn't preaching fundamentals, right? It was all technicals. So I had to go on my own and research and learn, ask Sharma questions, ask anybody questions, and just be a sponge when it comes to fundamentals and get super interested in it. And I naturally was. So, and honestly, fundamentals, it's kind of weird, because fundamentals is kind of why I got into Forex instead of stocks, because the currency market is more, global equities or global economies, interest rates, GDP, what's going on with countries, prime ministers, presidents, what are they saying, stuff like that. So that's all fundamental, right? So that's kind of why I switched over to Forex, not because of the charts, because the charts are exactly the same. It's the fundamentals behind it and what I was actually interested in. So it's just, the more you're interested in it, the easier it is to do the research on it.
Yeah, 100%. It's also, I think there's like this part of, sorry to get like off track, we'll go right back into chart analysis, but I think there's still this part of, like, when we try to explain something, people look at it, or majority of the people look at it like, well, it's probably easier for you to say it, right? Like, or I'm just starting off right now, I don't have, whatever resources, skill sets, knowledge, or whatever you want to call it, that just yet. So it's harder for me to do it. Honestly, we've all been through it, and that's why, like, we have what we're doing right now, right? The live sessions, or the series that we started, or whatever we're doing to help out. That's the reason why, because obviously we didn't have that, but we went through the same exact thing.
Yeah. So it's what's the quote? Wait, I gotta get it real quick. It's worth hearing, because a lot of you guys, especially you guys on YouTube, will appreciate this. I think I wrote it down. Yeah. I mean, the quote is a man, but like anybody, it goes for anybody. So anybody can learn from their mistakes, but wise people learn from the mistakes of others, right? So that's kind of what we're trying to do, is create that platform so that you guys can learn from our mistakes and our successes, so that you can carry that into the market and maybe not have to go through it yourself. A lot of stuff like risk management is subjective. Reading a chart, stuff like that, that's a lot of subjective stuff. You can take pointers from us, but there's a lot of stuff that you have to go through individually as a trader. Hopefully not blowing an account. Some people think that that's necessary. I don't think so. But, there's many things that you kind of got to go through on your own to develop that experience in the market.
Yep.
But let's go into the charts over here. So, again, this is the weekly. Again, we reached 156 over here, or 158 up here, and then they didn't increase rates, and we dropped all the way back down. Then they did increase rates, right? Now we got a lot of fear in the market. We ended up holding a resistance up here. right? And then just shooting right back down below 156. Very similar price action over here. Extremely similar. So you can take a lot of this data and bring this over to here to see what was actually happening. So right now, looking at the weekly, diagnosing the anatomy of the candles, you're looking at the previous weekly candle right over here. Strong body, right? Top wick rejection, strong body. Candle closed with barely a bottom wick, right? So what does that mean? It could go 50-50 from here, right? So actually this candle closed very similarly, right? So this candle ended up, I think it did create a top wick first, and then it broke below and created this bottom wick over here. But now we're starting to flip bullish, right? Now we're holding a support somewhere in here, right? Holding that support over there and flipping bullish right now. So we got to see what's going on the lower time frames.
Another thing that I did here was create like a line right over that weekly top wick. So then that tells us that if price were to break its own top wick with the news coming out today,
Right here?
yeah, then we will have good volume to come back and retrace that sell-off that happened from 156.
Yeah.
So that 154,500 going up to 156.
So
Right, that's like 150 pip range right there, but you know, you're going to have pretty good volume. If you're scalping, then obviously those 20, 30, 40 pips, whatever you're looking for with runners.
Absolutely. Aman is asking a question. Can we expect a move on gold during the Bank of Canada interest rates release today? Yeah, possibly.
Mm-hmm.
I don't think it would have much of an impact on gold, oil. Yeah, oil would be the main thing with Canada. Like just like Australia with gold and how a lot of their economy runs on gold. It's the same exact thing with Canada. So you probably want to pay a little bit more attention to oil. All right, looking at the daily now. Daily, now we can see that support a little bit clearer. You got that previous resistance over here, resistance, support over here. So we can mark that off of how price is reacting to this area and holding support. So we've had this downtrend over here. Price pushing down from 158, creating lower lows, lower highs. You can see it on the 4 hour, the 1 hour, a little bit clearer. But you have all these consecutive daily candles pushing all the way back down to 153,600, right? Actually, we broke all the way back down to 153,400, 153 flat over here with these wicks. So we'll actually mark this off because it's definitely a support on the lower time frames. So ended up rejecting this level, holding support up here on the higher time frames, and now we're pushing up, right? So are we coming up? Are we actually holding a support to continue up and creating like a higher low over here, right? Or are we coming up to this key area over here that we just marked off, the weekly top wick, key area right here, and then continuing to drop, right? All depends on, again, the fundamentals. Right up there. Looking at the 4 hour. See the 4 hour, since reaching 153, created the support down here, actually held that support down here, previous support over here as well, right? We ended up creating higher lows and higher highs. We created a higher low over here, another support right over here, consolidated a little bit, right? Obviously waiting for FOMC, not much volume in the market this week yet, and now we're starting to push up. As you know, if you take a look at the global equities and, more specifically UK 100, the FTSE over here, we're kind of rebounding over here, right? So over the week, we're down around 1%. Now today, we're kind of recovering up 1%. So, and you could see the Dow, you could see S&P 500, NASDAQ, not so much. But you could see some of these major global equities kind of recovering over the week. So that's why you see GJ kind of holding support over here. And now we're starting to recover a little bit, right? But if we get some more panic, coming today with FOMC possibly, right? And what could be happening, you could get this resistance held and continue down. So right now we're approaching this resistance up here. I think you're going to have safer buys above this area, which is going to be above that weekly wick. Hold support over here and continue up if that's what we get. You got to get some clean moves right up until here. Right? So you got that whole clean move to mirror if you want to take buys. So those are going to be safer buys over here, especially if you retest and continue right back up. Looking at the 1 hour now, as you can see, we're starting to approach that area up here. We broke through here. We struggled a little bit getting through that area. Check a mark off right now. Struggled a little bit, right? But we were creating these higher lows, right? And then what happened? We got some London volume pumping in, right? So London pump. Actually, Donnie, did you take a trade this morning?
Yeah, I did. I did as it broke that level this morning during the London session. I got the chart, my chart in our Slack London session.
Okay, let's check it out. Thanks for sending over.
Yeah.
Beautiful. So you took this impulse entry. What is this? The 15-minute. So you waited for the 15-minute to close bullish above this resistance.
That was a factor. Also, the 4 hour closed slightly above resistance. I waited for the bottom wick to form on that 4 hour, and also, there's a 15-minute that actually it was that 30-minute closed with no top wick. Mm-hmm. So I just waited for that on the next 15-minute candle, kind of created that bottom wick, closed bearish. So I waited. I didn't enter it yet. But that next 15-minute candle, when it closed or broke above that, that bearish 15-minute candle, I entered an impulse entry there.
As it broke the high.
As it broke the high, yeah.
Okay. Did this candle have a bottom wick?
Yeah, it did. It flipped. It almost went down to the bottom of that the previous one that closed bearish. It almost went down
all the way down there.
Yeah, it almost touched the bottom, and so I waited for it to it went all the way down right off the start, and then flipped bullish, and that's when I entered.
Off in like the second half of the candle.
Yeah.
Nice move, man. So so it closed 80% at 12 pips. Nice, perfect.
Yeah, I still got it.
Forgiven.
Yeah, my runner is still going right now. It's kind of a trailing stop. I got it's 4 pips. My stop loss is 4 pips into profit.
Okay. Nice, man. Okay, start off the morning.
Yeah, there's been some good moves in the London sessions the last couple of days.
Yeah, there's been a couple good moves. I mean, New York, not so much. Not with yesterday. But we had a couple good moves on Monday, I believe. And then Tuesday, Asian. Or actually, was that Monday, Asian? I took that. I forget. It's in my journal. Monday Asian got about 20 pips on GJ. But let's look at the 1 hour over here. Right now we're kind of mirroring this move on our way up to this level. Looks like we're starting to stall out a little bit. These candles are getting a little bit weaker, but this candle right over here. Let's see if we end up stalling out right here. You got this previous support right over here too. The price could be reacting to.
Mm-hmm.
So could we be getting some kind of a pullback over here before price continues right back up to 154,500? What level? This is 154,300 as well. So price could be reacting to that. 30-minute looks pretty similar. So we'll see what ends up happening in here. If we end up holding some kind of a support. Should I move this?
So when I look at the 30-minute candles here and even the 1 hour candles here, you clearly see some sort of exhaustion in the markets, right? Where you have those massive top wick, bottom wick rejections and all that type of stuff, candles breaking the lows and the highs, and then price kind of exhausting out after tapping into a previous support area. So at this point, clearly, an impulse trade or something like that, it's not going to work out. You need to wait for those clear confirmations. So in this case, I'm going to annotate here real quick, Stefanos. When price was consolidating here and finally broke out, you had a doji candle close, right? The next candle, which was weak bullish. The following candle gives you a bottom wick rejection right into this area, grabs that liquidity. How do you know it's liquidity? Because the following candles continued with volume to the upside. Now we come back and tap right into this area of 154,300. If you were to go onto the hourly time frame or the 4 hour time frame, you would see that price reacts to the same exact level a few times in the past, right? So the way that, there you go. So right here on, if you go into the hourly real quick, So you have the 30-minute, of course. And then here, even on the hourly time frame where you had this break and retest right into these areas, and then a nice sell-off before price came back and consolidated here, right? So all of this is clearly a very important level that price broke out of but never came back to retest, right? You never even saw a bearish candle down here on the 30-minute time frame. All you really saw was a doji candle close. That's it. And then from here, again, market taps into it, grabs that liquidity. How do you know it's liquidity? Because you have a ton of volume that follows. Creates a support, fails to continue back up bullish to break previous highs, and then comes right back down with a massive sell-off, right? So those are the same exact areas where you had great volume right here, and then this one, failed to break above and continue, but came right back down and had a massive sell-off, and that's the same exact area that you're tapping into right now. So this is the hourly candle. Some of the ways that I would kind of approach it is I would create like a line or something down here, or zone, whatever you want to do, and then kind of look at, well, if price breaks its own low that it has created already, what's the next move, right? At that point, you're probably going to end up mimicking this entire sell-off that just happened here, right? And come back and maybe correct this entire push-up that's happened here, just very recently. So this is probably just the limitation of my trade right here. That's probably the longest that my trade is going to run, simply to come back and correct that entire push up that happened after this consolidation. But if you continue pushing back up, same thing. Where's the limitation of my trade? I've seen that price does not continue anything above this for quite some time. So I could look for a trade opportunity that, again, 154.500 is probably going to be the limitation of my trade, unless I see a break and retest here on the hourly time frame or the 4-hour time frame.
Like it. So I just want to see how price is reacting to this level. Okay, yeah, we got multiple rejections over here in the 15-minute. So we have kind of like a support like Sharma just drew. And extend that to the left a little bit, as you can see, previous reactions to that area. So are you looking for a correction to grab part of the correction?
Yes. That if you're looking for a scalp, that's a potential trade right there. So yeah.
No, go ahead.
Okay, so right here even on the 15-minute time frame, it becomes a little bit more clear, right? So clearly we didn't see any bearish candles here, but we see it on the 15-minute time frame. We're pushing up. All of this is exhaustive moves. Nice top wicks and all that type of stuff. Now you need to clearly wait for candles to continue down. If you're going to look for an impulse trade, let's say it happens when news is about to come out or something like that, then you're going to wait for a candle close somewhere down here, look for that top wick and sell off. But this is where you should start targeting your partials, or if you only go for 10-15 pips, then maybe this is your only target, right? But all of this right here on the 15-minute time frame is giving you those clear indications of exhaustion and that price is collecting orders. You could end up seeing something like this, but in order for this to be valid again, you need to wait for that break and retest. Something like that just happened right here.
And we don't have too much volume in the market too. Like right here to here is only the 10 pips. Mm-hmm. So if you're only targeting like an impulse entry where, like Sharma said, you get get a close below this level.
Yep.
Right? And then you get the top wick. And then price just drops, and you take that as it flips or as it passes the low right here, you only have 10 pips from here to here. And if that's an impulse entry, you're looking to secure most of it, as you're trying to grab that volume push, and you secure most of it knowing that there's a high probability that you'll get a retest over here. And maybe if you wanted to stay patient, wait for the retest, that might be even better.
Yeah, just understand what the limitations of your trades are when you're going in. Right? If you only see that 10 pip range, then only take that 10 pip range, right? Don't think like, it's already dropped so much, maybe I'll hold on to it and then, wait for this entire 24 pip range. It could happen, but you need to be able to manage your trade properly.
Absolutely.
All right, let's go ahead and move on to gold real quick.
Let's do it. All right, gold, same thing with the skeleton. We have 1830 here that I want you guys to pay attention to. Been a very significant area right over here as price has been just, reacting to it multiple times over here, just pushing down from it. Also, we've been holding this support right down here around 1750, I I would say 1750 has been holding a strong support over here. Also, 1760 over here, right? You can also look to the left. You'll see more reactions to it. But we've just been playing this range right over here. We finally broke above 1830. I keep thinking GJ prices. We finally broke above 1830 over here, had a fake out, but we created this high up here, and then we broke back down into the range. But since then, we've been creating these higher lows over here, gradually trying to push up and continue right back through it. And actually, the price action right here, where is it? Yeah, the price action, I would say, all right here, how clean does that look, right? We finally got this high being created. We come down, hold support, and then we get these clean bullish candles just pushing up because there's a lot of fear in the market. A lot of people pushing price up. Now, right now, we have FOMC coming out. So right now, we're in a key area, right? We're in this, we're tapping this trend line for the third time right over here. Another key area. Now we're at a key area right now. I know we reacted to it as well. So now we got to see if we're going to push right through it. And it looks like we possibly could, depending on what's going to happen with FOMC. All right. So we ended up creating this high over here in this key area, right? Tapping into this trend line and then just dropping right back down to 1830, holding a perfect support over here with a strong bullish candle, right? With not much of a wick, but strong body nonetheless. This candle came down, created a bottom wick, never passed the low of this one, never broke below 1830, and passed the high of that candle, pushing up. So are we now coming down to retest this area over here to hold support and then continue right back up to here? Now, we're actually reacting to a previous support right here. And I believe if you look more to the left, you can drag that over too. $18.50. Zoom just makes my computer so slow for some reason.
Yeah, same.
Right?
Yep.
Like, it makes me not even want to chart. It's like, come on. So anyway, we're reacting to this level over here, but we have this previous resistance over here that we need to look at on the lower time frame. So maybe we're sitting in a range right in here. All right. Well, actually, you know what? The whole thing is a range, right? This is something that you really want to stay out of, and you probably want to wait for price to break this level up here. Now, you could say that this is like a little fake out. Let's say the level is right here. And price is coming right back down into the range. But I these bearish candles are very weak, right? Very weak bodies. So we could be rejecting this area. The next candle could be end up being like a strong bullish candle pushing up. But again, we're consolidating in here. The reason why I have it right here is because we're just waiting for price to break this whole level before FOMC. So I really wouldn't be touching gold until any of that happens today at 2. Are you, Sharma, what are you guys going to be doing for it?
For gold, or for gold specifically, or interest rates?
Yeah, interest rates.
Oh, for interest rates, we're still going to be waiting on it. I might do like a quick Zoom call with my team when the interest rates do come out, so we see the live markets together, and we're able to take the same trades.
Okay, cool. Good stuff. So looking at the 4 hour again, we're kind of consolidating in this area. And now, right now, it looks like we're trying to react and hold support at this previous level that we kept projecting over here.
Mm-hmm.
So price ended up coming into this level. Also, 1842 as well, right? Price kept rejecting this level over here. But right now, it looks like we're trying to hold support in this area. So this is basically our range over here that we're sitting in. We kind of exited this range. Now we're in a new one, holding support over here, but we're also holding this resistance. right in here. Right, so price broke below it. Actually, you know what? Can actually. This is brutal. Kind of put it over here because we had that previous support over here. Now a new resistance right in this area. Are we coming back into this area? It looks like we're rejecting it again. You could be getting that close above this area and continuing right up here as well. But again, I really would stay out of here before FOMC.
100%. So the goal should be, as you guys are dropping down on the lower time frames, you can definitely adjust those levels that you have created on the daily, 4-hour, weekly, or the monthly time frames, just to narrow in a bit more so you don't have wide ranges. But understand exactly where specific price action is happening where you don't want to be part of, right? And then wait for your clear moves. But with that, you have to understand that if you have marked up, let's say from 1848 to 1852, and you're only looking for those buy opportunities, then only go with that buy opportunity, right? So don't try to drag it out to, 1860 or something like that if you don't see the price action there. Literally, the charts will tell you where is price headed. The fundamentals are going to kick in just to support those moves, right? So make sure that you guys understand what's the limitation on your trade. Don't try to turn, a profitable trade into a loss.
I'm trying to see if we have any valid trend lines.
The entire thing is just a massive consolidation from like daily time frame and down.
Oh yeah. Price has been respecting this whole thing right here. There you go. All right. So does anyone have any questions? Do we have any on YouTube? Actually, let me give me 1 second. I'm gonna go grab some water and I'm gonna grab my iPad.
No worries.
Watch on YouTube.
No worries. Yeah, so if you guys have questions on YouTube, feel free to just put them in the chat. We'll be more than happy to answer, or even here on Zoom. Hopefully everything made sense so far. No questions? So some of the things that I used to do, maybe it'll be helpful for you guys too, is when I started looking into how to trade interest rates and all that type of stuff, I started off with first, obviously, paper trading for quite some time, just to see how the market reacts to the different sentiments or the different statements that are being put out by the central bank officials, right? So if there are things that they try to say, which are pretty much along the same lines of, well, it's data dependent, or the path of, let's say, the economic outlook depends on the path of the virus, or whatever. These are some of the similar things that we have heard in the past almost 2 years now since the pandemic. So how did the market really react to that, right? So did it take it in a positive way, in a negative way, and what were some of the key points that really made investors feel one way or another, shifted the sentiment, right? And then how did that translate into the financial markets? So then how did the market actually set up, let's say on the daily time frame, on the 4-hour time frame? What were levels that price was rejecting or retracing to and then dropping down from, right? So really looking at the technical analysis and the fundamental aspect of it. And that itself together is going to help you understand what's the market sentiment like. So if this is going to be your first interest rates that you're going to be trading or you're going to be looking at, then that's one thing that you can test out. Yeah, there's a lot of uncertainty with GJ, right? With the whole political stuff that's going down in UK. And right now we're sitting at those key levels too. We just bounced off of that monthly level on GJ, right? So clearly there are fundamentals that are coming into play. We kind of just have to wait it out and take a look at what's happening fundamentally when it comes down to the politics and all that type of stuff. But more importantly than politics, it's important to take a look at how's the economy overall doing. So we know that there's always been not always, but like more recently, there's been an inflation issue, right, significantly in the UK. So how are the businesses reacting to that? You still have those post-Brexit consequences and post-Brexit discussions going on. So how are the markets reacting to that? How's the economy reacting to that? So the data is what we really need to focus a little bit more on. And then I think about next week on the 3rd, I believe, we have, next week on Thursday, we have interest rates coming out from the UK. So we want to start looking at, well, what are some of the key data points that we want to be paying attention to, especially coming out from the UK that may lead up to the interest rates, and what can we expect to see. So anything related to consumer inflation, retail inflation, the producer side, all that type of stuff, you want to pay a little bit close attention to. So if you go back, I believe, when did this come out? On Tuesday, January 18, in pre-London session, we had CPI coming out, we had PPI coming out, and RPI coming out, right? So go back and take a look at that data. So look at data that's related to consumers, the retail side, the producer side, the labor market, all that type of stuff for the UK. So then you'll have a good picture of what to expect going into next Thursday when the interest rates come out.
You guys doing?
Doing good.
Cool. Let's see. YouTube. Do you have any questions on that side?
No questions. Nothing yet. We still have GJ consolidating. That's about it.
Yep. What else is new? No questions. If you guys could share this whenever you get a chance, that'd be awesome. Helps a lot. Helps other people learn. That's all we ask. That's the only fee. Sharma, you listen to Andy Frisella? Does anybody listen to Andy Frisella?
Yes.
His podcast?
Yeah. I think he's hilarious, but he does speak the truth.
Yeah, he's great. But every podcast he starts with like, all right, you got to pay your fee. It's the only fee. You just got to send it out.
Yep.
Let everyone know.
He drops a lot of gems though, and those are some of the things that have helped me personally in like my businesses as well.
Oh, good.
Yeah.
Yeah, he's got a huge operation going on over there.
Yep.
First Form. What was I going to say? Oh, yeah. I like how he's been having people that have done the 75 hard on.
Mm-hmm.
You notice that? The one kid I actually followed on Instagram, he's I reached out to him because like he had a pretty cool story, very similar, I would say, to mine back in the summer. So it's knowing like everything that they went through and that whole thinking and stuff like that. It's so beneficial. It's a lot. It's a lot if you have a full-time job and you're also like trying to pick up this trade and trying to like develop this skill as well. But it was something great to do during COVID.
Mm-hmm.
Also, if you guys have businesses, stuff like that, it's very tough to do a 75 hard right now. But
I think it's a great start. This is something that we've talked about as well. I think the very first episode that we did for Secrets of Trading for this year, I think we touched on it, where I think it's a good start to start off the entire year and all that type of stuff. A lot of people, they are going to fail in the first time, right? Because especially if you're not used to a schedule like that, or you're not used to pushing yourself, but then you get to learn a lot about yourself too, right? What are some things that you can do, and what are some things that you need to work on? I won't say you can't do, because you can almost do anything and everything that you want. It's just you have to change certain things about yourself, the way you think or your lifestyle or whatever it is, to accomplish those tasks.
Yeah. You got to put yourself like now in the back end, right? Mm-hmm. You got to always think about your future self and like paying your future self, and making sure that your future self is proud of you now.
Yep. Has
That's all
anyone
good.
here done the 75 hard? Got a message. Yeah, you could analyze the DXY chart, and it'll help you not so much as like a I guess like a confirmation. Like, don't use the Dixie chart to look for buys or sells on the dollar, right? But try to understand, okay, what's the strength of the dollar right now compared to other currencies, and then use that information as more like additional information. So it's not going to replace the actual chart of, let's say, like GBP USD or something like that, but it's going to help you understand what's the overall strength of the dollar at the moment.
That second question, is that my Carlos?
I believe so.
Okay. So question for you both. I know about Forex Factory, Forex Live, Forex Street, but which fundamental website do you go to? There's a couple that I really like. Actually, let's see. So one, this is a free database right here, Teletrader. I shared this with my group. I love this website. This, you could get everything that you want. You got news. You got all the markets, all the main markets. You got commodities, currencies over here. You can actually go into each currency if you want. Or let's say you want to go look at the Dow right now. Click on the Dow, and it gives you every little data point that you want to know. You could also, they have like a full chart. I don't think it's up there with TradingView, but you could do all the charting you want on here. Right over here.
Mm-hmm.
So this thing I think really comes in handy. Pretty interesting, looking at the Dow over here reacting to this support over here. Actually, we can break down the Dow too, but this whole thing. Then you got news. I sent the thing in there in the chat over here. But any news that you want to be reading up on it. But then, like I said, you could go to the currencies part of it right over here. Yes, trade GJ. Everything you really want to know about GJ. You got news. Right? Everything, you got bonds, commodities, futures, stock screener, funds, ETFs, bonds. You got the whole news section over here, economic data. This is great to use. There's a couple other ones that I really like. You know it was actually really good with putting out articles like, this week in the market, stuff like that, is Baby Pips.
Mm-hmm.
Baby Pips has a good, like if you go to their full, like the front page over here, some of these articles are good. The way they write their articles is pretty funny too, but this is a great source, not only for just education, like the university that they have, but just all around. Baby Pips has always been really good. And they also have this new market milk thing where you can look, they have like a currency strength meter. You can, type in your pair. It'll bring up a bunch of info for your pair. That's great. What's up, Carlos? So, you got Baby Pips. I like this website right here. This guy's pretty good. Mark to Market, it's called. Let's send this into the chat as well. So they have these articles here. It gives you like an overview. Federal Reserve and Bank of Canada meet as risk appetite stabilize. So obviously, equities are starting to rebound a little bit to start the week, or midweek, I would say. But it gives you a whole overview of like what to expect. Asian market, Beijing, talking about Beijing, talking about Europe. What's going on with like Italy. Here you go, Europe. Some of the data points coming out. America, U.S. reports the December goods balance and some inventory figures that may be helpful to fine-tune Q4 GDP figures due tomorrow. And then they go into talking about that. So it's a great website. It's not like flashy or anything like that, but a lot of really good information. Daily FX is a really good one. They have a lot of forecasts and stuff like that. A lot of good articles that you guys can read up on. And some of these offer newsletters that you guys can subscribe to right up here, and they send it to your email. And then something that we have in the group over here is a fundamentals feed. where
Yeah.
I have the RSS feed coming right to Trello, or not Trello. I'm using Trello too much. Right into Slack, where it just sends all these articles. I have it coming from Daily FX, FX Empire. I'll bring that one up too. You have Forex Factories on here as well. Forex Live is on here. Let me see what else we got. These are all FX Empire.
That's the same thing that I have. Pretty much all of them, and then also like CNBC for stocks and all that type of stuff, and then crypto. We have news for
Yep.
that too.
That's awesome.
Yeah.
It's helpful. Like, this is a never-ending chat right here. So it's just something that, you're not. You could go back into it and look at like today's date right here.
Yep.
Look at today's date and just look at some of the articles. Like, okay, it's like a one-stop shop for like all these news sources that we look at. FX Street, Daily FX, and they got a lot of articles today.
Yeah, it like updates automatically as soon as the news comes out.
Mark to market, what I just showed you guys.
Mm-hmm.
This is this is from them as well. But yeah, it's good to have.
And a lot of these are free resources too, so you guys don't have to pay for anything, right? That's not something that you guys have to worry about.
Now, FX Empire, I actually found through TradingView, TradingView. Yes, just have a brain for it. TradingView, when you click on the news for your currency or whatever pair you're on, most of it goes right back to FX Empire. That's kind of how I found this. So you got education here, forecast here, for whatever you want, and then all the articles then here.
Yeah.
Good resource.
They pull a lot of their articles from Daily FX and from FX Empire.
Yeah.
But yeah, so these are some of the free resources that you guys can go check out and get your news from. I really like Forex Live if you're trying to get into fundamentals because it summarizes it for you, and now you can, once you start getting a hang of that, then start getting into like other articles and stuff. So I like to go to a couple of different resources instead of just relying on one specific one. So then you're able to validate the information, and then a lot of people are going to put it in a lot of different ways, clearly. So you start to understand, like, okay, well, what does this article exactly mean when you start to cross-check it with a lot of different resources.
Yeah, I can't believe I didn't even bring this up. Yeah, Forex Live is one of my favorites because if you go, they changed it up a little bit, but if you go to more over here and then session wraps, which is what we're on right now, if you guys come to the market, let's say for the New York market, and you want to know what was going on during Asian and London, you could look at both of these. So like Asian is out. Europe comes out, I think, in an hour or two, the European news wrap, and it gives you all these articles of things that you need to know, right? You don't have to click on every single one. What I normally like to do is read this first. I read the whole article, which isn't normally too long. And then what I'll do is I'll go through here, and then I'll open new tabs for each one I'm interested in, and then I'll go back and read them.
Mm-hmm.
This full-scale war is very difficult to accept. Wow. Yeah, I'm just reading some of these right now. Yeah, Japan likes that loose policy.
Mm-hmm.
Yeah, so like right here, I'm wondering where this takes us. Bank of Canada kicks it off with their statement at 10 a.m. Bank of Canada Governor McClem, did I say that? McClem conducts his news conference following at 11 a.m. So basically like Powell talking. So we're going to be at 2 p.m. Eastern Standard Time, and he'll be talking at 2:30.
Usually, if you got another thing, like if you're trading interest rates, usually you'll see the market reacting heavily to the press conference more than the actual interest rates, because in the press conference they'll answer questions that'll cover what's the current economic state, What are they looking at specifically when it comes to the outlook? What are different scenarios that the Federal Reserve can react to, going into the next couple of months or so. So the press conference usually is what the market reacts the most to. And that's not the time that you want to be in the markets, clearly. So look for those quick scalps in those 30-minute span. I think there's a 30-minute span between the press conference and the actual interest rates. Yeah, about 30 minutes. So you can look for those impulse trade opportunities, but you have to be very quick, right? And then after that, you'll see those higher time frames kind of confirming with the fundamentals that have been coming out. But I would highly suggest don't trade the press conference. And matter of fact, paper trade if this is your first interest rates that you're trying to trade, right? Look at how the market reacts, look at what are the fundamentals that are coming out, and look at how did the market set up for that specific move. Trust me, the market will always set up for the specific move. You're never going to get if you truly understand the actual price action, you're never going to get too surprised by the way that the market reacts.
Yeah, GJ breaking up over here.
There's 5 minutes left, so I want to see how this candle closes. So then it's a break and retest, and you could see a quick scalp up.
Exactly.
Abraham, you could drop the link to your chart real quick, and we can pull it up and then help you out.
Viral TikTok hits. Good morning. I'm curious to know if you only have average of 2 hours to look at your trading session. Yeah, no, 2.5, 3 hours, I would say. So in my trading plan, which is something you should always have, I have this physically written down that I trade from 6:30 to 9. And if I don't catch a move, because you have 2 opportunities to take a trade, especially if you're a scalper, you have 2 opportunities. If I don't take my opportunities till then, before 9 o'clock, then I have until 11 o'clock where I can take a trade. After that, I'm pretty much done.
I usually only look at the markets for about an hour a day, and that's right when New York opens up until New York Stock Exchange open. Maybe depending on fundamentals, if it's a fundamental heavy day, or a session, I should say, not even the day, but if it's a fundamental heavy session, then I go up until 6:30 a.m. PST, which would be 9:30 a.m. Eastern time. But I don't spend this long usually on the charts. Wednesdays is probably the longest that I spend on the charts because I'm doing the live session with you guys here on YouTube.
Yep. So yeah, we'll see how this 1 hour candle closes. A 30-minute as well. We start to exit this area. Now the only thing is you only have about 12 pips over here. Actually 17 from here, but from right here you got about 15 pips to take this back up to 154,500.
Abraham, I don't see the link in the chat here for your GBP USD chart. Do you have it on your end, Stefano, just in case my thing's probably lagging?
On YouTube?
Yeah.
Yeah, I don't see it yet.
Oh, okay.
Viral TikTok hits. If you just go to the camera over here and click the third option right over here, and then just copy that into. Is it Abraham? Oh,
it's Abraham. Yeah.
Yeah, I don't see it, buddy.
All right, we got about 2 minutes left. So now we're starting to break those previous highs, especially the 30-minute highs. So ideal entry here would be the following candle makes a bottom wick and then continues pushing back up. And then as that candle flips bullish, that's where your entry is. Yep. And again, that's probably going to be a 15 pip range, 10 to 15 pips. So don't get too greedy with it, right? But it's very important that we pass out all of these wicks right here, because if we don't do that, let's say price comes in, just taps into that top wick and then flips back down, all of that is just going to be like a fake out or just wick rejections. That's it, right? And so in about a minute or so, you have the New York session opening up. So you want to make sure that you're not getting caught up in any of the fake outs or, this consolidation and all that type of stuff. So make sure you wait for these wicks here to be, completely cleared out. You have a bottom wick here and then a continuation back up. If this candle, the next candle, starts forming with no bottom wick and it continues pushing up, you will see some sort of exhaustive move as we start tapping into those 4-hour and daily levels.
Just be aware if we close below this level right here.
Mm-hmm.
If we do that, then I think it'll be invalid. Anybody else looking at anything that they want to take a look at? Let me see the VIX right now. See if it's come down a little bit. Yeah. Coming back below 30. So we get some risk aversion coming back into the market a little bit, as you can see, like what we pointed out from TeleTrader.
Mm-hmm.
You have market equities and pre-markets starting to rebound a little bit. All right, 8 o'clock coming down, creating that bottom wick. Looking at the 30-minute, we got a nice 30-minute close above this area, but at the same time. So again, if we create this bottom wick over here and we start pushing up, that'd be nice for us.
So this is the time that I usually start trading, or come onto the charts, and then spend about an hour or so.
It's not worth you waking up over in California for like pre-New York. It's
if there was the volume in it, then I wouldn't mind. So that's where I've narrowed down looking at the live markets, the simulation sessions, and risk management entries, all that stuff that we just talked about. That's how I kind of narrowed down, like, okay, what exactly is my trading session? Do I really need to be on here for 3 hours for what I need? Not really. So then I narrowed it down to like, okay, there's that 1 hour.
Exactly. Yeah, guys, so I am in right now. I just took a little impulse entry as we created that bottom wick past the high of that candle. Looks like we got some good volume in it.
Mm-hmm.
Is anybody else in right now?
Yep.
You say yes?
Yep, I am.
Cool.
My entry is 154.341.
Okay, cool.
He was asked whether he would publish the report by senior civil servant Sue Gray.
So it's a 15 pip range, and so in that 15 pips, once we tap into 10 pips, the way that I'm looking at it would be my first partial, and then let's say if we have like some sort of a break and retest or a bearish candle close, or the next candle makes a bottom wick or something like that, next 15-minute candle makes a bottom wick and then continues back up, I would move to break even.
Nice, Cat. Is this clear for you, Cat? Awesome. You could speak, Don't be shy now.
My brain is a little sleepy at this time, so I'm like.
I gotcha. I just feel like sometimes it could be intimidating. A lot of people coming on.
At times. I did want to ask about that first target that you got. Is that the first target, the 154,500? Where exactly it came from? Because the way I was drawing it was a little bit lower.
Kat, I'm sorry, I didn't catch that because I was just reading Borga's message over here. What did you just ask?
As far as the 154,500 level, I'm
Yes.
just wondering how you guys drew that one because I was drawing that level a little lower the pressure.
You were drawing it probably around like 450.
Yeah, ish.
Okay. Yeah, no, that makes sense. Just anywhere, this whole zone right over here. Once we tap into that area, you can really draw it like this if you want. I just don't like having these fat zones.
Makes sense.
I just got the level from that's the top wick of the weekly candle. So if price breaks above that, then you're going to continue back up to some of those higher levels. But that's where that 154,500 came from.
Got it. Cool.
Does anyone on YouTube have any questions? Abraham said, wondering if you could please do a quick analysis on GU since you can't see the link.
Borga, is this the level you were talking about, 450? Awesome. You don't have to yell at me, man. All caps. Let's get a little skyrocket.
We also have news coming out. It's low impact news, inventory news, and all that type of stuff in about 25 minutes.
Yep. Oh, they got a little YouTube symbol over here. Live on YouTube, guys. Looking for a little rocket. Wow, they got Apple symbol, Microsoft. I never use these.
There's no rocket.
There is no rocket.
Oh no, there is.
Where?
Right here.
Oh, perfect. Let's shoot up.
Yep. So then another thing that I do personally when I'm like already in trades and all that type of stuff, really don't stop analyzing, right? What's the market doing and all that type of stuff. So if I go into the 30-minute time frame, we just passed that wick that we were talking about, right? And then price just made a little bit of a top wick and it seems like it's pulling back. So that's the fluctuation that's happening in the market at the moment, right? So you're about to come up close. So we just passed up this wick that we were just talking about previously here. Give me one moment. All right, there you go. So that top wick that we were talking about, we passed it up, created some new highs. We're kind of fluctuating in this area right here. The 15-minute, you have a couple of minutes left for that. So right now, clearly, the market is still quite bullish, right? So you have about 8 minutes left for this 15-minute candle. Still bullish, made a bottom wick rejection right into that consolidation area here to the left. So clearly collecting some volume. That's why we were able to come up and create those top wicks right here, right? So personally, my stop loss is a little bit wider. It's right down here. But a continuation back up, what are some of the things that we need to see in this 15-minute candle? So wait for this candle to close bullish, right? If it closes bullish, there's really nothing telling us that it's going against us, right? That the trade is going against us, so you don't really have to worry too much about it. But if we have a bearish candle close, let's say right into the zone, and the next candle starts pushing, so before it even hits my stop loss, obviously, if the next candle starts pushing down and it doesn't have enough volume to continue pushing bullish, it has to continue coming back and tapping into this area for more liquidity. That tells me that the price is not ready to continue pushing back up. So in that case, that's the determining factor for me that, okay, yes, I have those 2 attempts that I can take every single day, but I'm not going to take my second attempt until interest rates come out. So Abraham's asking if we can do the GU analysis. It's Up to you.
Yeah, 100%. Do you want to do it now? Do you want to wait for this trade?
We can do it now.
There's
We
a
have
lot
about
of
6
people.
minutes left.
Okay. Let's see. PUSD. All right. There it is. All right. GU. So looking over here at the monthly, looks like we're respecting like a multi-year downtrend over here, right?
Mhm.
Just pushing down since 2007, creating lower lows, lower highs. Not so important for us right now. What's more important is that we're sitting in a higher time frame range over here. All right, Donnie, I'll see you later, brother. So right now we're kind of sitting in this range from here, 142, and down here at, get rid of the chat, 121. Right, we're sitting right in this area. We also are meeting up with a key area right down here as price is reacting to that trend line, and also the more importantly the resistance area, right, that supply zone. So right now we are in this downtrend. Right, we had this support right over here on the monthly that we were holding. We broke below it. We retested it, right, and created this low down here, right? So now, are we coming up to retest this area over here? It looks like right now we are rejecting that area on the monthly. So this monthly candle came all the way up to retest this previous support, and now we're starting to flip bearish.
It's quite
Right,
similar
so
to GJ in the sense that it's consolidating in this in its own range for the past couple of months.
Yeah, you're going to see a lot of similarities between GU and GJ. You can get a lot of data and stuff like that from both pairs to use for the other.
Mm-hmm.
So again, we're kind of sitting in this range now, right? We just rejected that level. Monthly is now bearish. Looking at the weekly now, weekly has a nice resistance over here, right? We're now in this bearish trend over here, lower lows, lower highs, right? Creating new lows coming up. I don't want to draw another trend line, but you get the point. We're just, making these new lows over here. This previous candle right over here ended up closing bearish, right? Rejecting that area, strong bearish candle, barely a bottom wick, right? So this candle ended up creating a top wick, flipping bearish, and coming right back down into this wick right over here, which is something that we need to take a look at on the lower time frames. Looking at the daily now, adjust that. We are now holding a support in this whole area right here. Right, you got a couple wicks down into this area. So before taking sells, we need to see if we're going to retrace a little bit to create another resistance or a lower high over here to then continue right back down and retest this low, or wait for the close below this level where you could take price down for another swing. So we'll see what ends up happening. If we get more fear in the market, you're going to see this drop a little bit more, right?
And that's the same zone that you just created right now. That's the same bottom wick from the weekly time frame as well, right? So what I personally do is on the weekly or on the monthly time frames, I'll just draw like a quick line on their top and bottom wicks. So then you know that if price is breaking, let's say its own bottom wick, so see that zone that you just created, that's the bottom wick from the weekly. So if price breaks its own little bottom wick right there, then obviously it's going to be a nice sell-off continuing down to the next zone, right? Or if it breaks its own top wick, then that means the candle has flipped bullish and you're going to continue pushing back up.
So we can mark off this top wick as well.
Yeah, and then when you drop down to lower time frames, you can start to narrow in into your zones.
Exactly, that's a good point. So yeah, that previous wick on the weekly over here is also previous resistance and support over here, right? So are we coming up to the area right now, holding support? Nice rejection wick right over here. This candle created a bottom wick past the high of that candle. Are we coming up into that area? Or are we going to reject this area right here? All right, 135, 260.
Mm-hmm.
Looking at the 4 hour, right now we're creating a higher low, it looks like. Right over here. where we had this range, right? Price rejecting it multiple times. This is that weekly wick. So price ranging in here. Actually gonna make that thinner. And now we broke that area, coming down to retest, holding support. Are we going to continue up with a clean move to the left to mirror? Right? Where are we heading from here? Looking at the 4 hour, and we can adjust these. We have a range that we're sitting in. We keep rejecting. So I should look at the, yeah, that's all right. So where could we be heading right now? Who wanted to break this down? Abraham. Where would you say we're heading right now? Either way. And then we'll correct you from there.
GJ is still in its range.
GJ?
Yeah.
Yeah, we're still playing around over there. But we're definitely looks like we're exiting that area on the 15-minute. We're trading higher lows, higher highs on the 15-minute.
Yep.
So with that 8 o'clock volume, we should be pushing up. 15 is going to close strong. Oh, nothing better than a good stretch.
Yep. France said that trend will depend based on FOMC.
Wait, what happened?
And Zoom? Answering your question.
Yeah, trend will. Yeah, absolutely. All right, 15-minute. Nice. Nice. Pushing up. 15-minute close with no top wick. So we're going to go back to GJ real quick.
So now you're going to be approaching your 10 pip mark, right? So make sure to take some partials at that point.
Absolutely. There we go. So we just approached this area up here, and I just took a little, I closed 50 of it.
Mm-hmm.
Closed one position once we're starting to approach this area over here. Because as you can see, the 15-minute, when that 15-minute creates a, closes like this, but barely a top wick. Actually, it did close to the top wick. I'm on MetaTrader. I don't have any.
Mm-hmm.
It's looking good. We entered right here.
Yep. So
now my stop loss is going to break even.
Perfect. Yeah, so for me, I just closed a percentage of my trade as well. Took the first partial, but instead of moving to break even, I kept my stop loss. I have my stop loss right above this candle right here. Or this wick right here. It's almost break even, right? But I'm still giving it enough room just in case, it does want to pull back or something like that and then continue pushing back up. But the limitation or the most I'm going with this trade is going to be at that 154.500. And then after that, I'm done scalping, and then we're going to take a look at interest rates.
France. Where's it? Francais.
All right.
At this point, I'm going to take another little piece off of this one. Got about 8 pips on it. That's it. That's your little scalp. That's your little move of the morning. And again, like we've been saying, this is that that little push before interest rates, and this is all you're going to get. And again, with a small range like this, even if it's a small range, so realistically, from here up into here was only 10 pips, which is our range. Typically, I don't like to trade in that. Mm-hmm. Normally, I like my ranges at least like 20 pips, 15, 20 pips, because realistically, you can easily grab 10 pips out of that. Yep. But in the 10 pip range, what's realistic? Maybe 7 or 8. So, also glad to be back with you guys doing this. I know we had a little break. We had obviously Christmas break and everything. You had the wedding and stuff, which I don't think really affected this, but I don't know what we've been doing. Whatever. We've been busy, guys. I'm sorry. We do our best to get you guys and do everything we can.
Yep, 100%. Alright, so see how price just went up and kind of rejected that level and is pulling back a little bit. So it's still in its range. Technically, nothing's telling me that the trade is going against us, but it is telling me that soon, as we tap into some of these levels, there are going to be some potential pullbacks or something like that, because it could be an exhaustive move.
I'm out.
All right, I'm still holding on to a small percentage.
There you go. Just for those of you guys that just won that trade too.
Mm-hmm. There you go.
So annoying. We got so many in here.
That's when you hit your stop loss.
What's up?
I said that's when you hit your stop loss.
No, this is. You ever play Grand Theft Auto?
I have, yeah. Oh, man.
There's so many on here. You ever see that Shia LaBeouf video of him he's like, just do it? Just screaming. You ever see that?
No, I haven't. But that was
You
pretty
haven't?
funny.
Oh my god, that's alright, we gotta bring that up. That's
Have you ever
hilarious.
seen the the anti-motivational speech of him? Like they edited it where he says just don't do it. Let your dreams be dreams.
Mhm.
That's what it is.
It's amazing.
I know, it's so I'll bring it up right now. This song is funny too. So if you guys want some motivation for the week, here you go.
Do it! Just do it! Don't let your dreams be dreams. Yesterday, you said tomorrow. So just do it! Make your dreams come true! Just do it! Some people dream of success while you're going to wake up and work hard at it. Nothing is impossible. You should get to the point where anyone else would quit, and you're not going to stop there. No, what are you waiting for? Do it! Just do it! Yes, you can! Just do it! If you're tired of starting over, stop giving up.
It's actually a really good message. The delivery is interesting.
Yeah, it's hilarious.
Can you search for just don't do it?
There's a don't do it?
Yeah, there's a
haven't seen
don't do it.
I haven't seen that one.
It's really good.
I'm mine. Now I can be successful. Don't do it. Shit. Anti-motivational speech.
There's three types of men out there.
I love how this one's longer.
That is a victim. That doesn't have the capacity to
I like this commercial.
everyone. He blames his wife, he blames his business, he blames the economy, and he's looking for a savior. Guys who are looking for a savior,
He's right too.
don't do it!
Oh.
Just don't do it! Let your dreams be dreams. Yesterday, you said tomorrow. So just don't do it! Make your dreams come true!
That's great.
Don't do it!
That is pretty funny.
Dream of success while you're gonna wake up and let
This is a little weird. I'll send this to you guys. This is pretty funny. I'm gonna have to watch this right now.
you're walking in the woods. There's no one around and you're
These commercials are getting interesting.
All right. Let's see. We got some news coming up in about 7 minutes.
So, any progress on moving out of California?
Not just yet. There's too many things to take care of just right now.
So you're saying there's a chance?
No, definitely I will be. Just at the moment, gotta take care of a couple of things.
I don't blame you.
Mm-hmm.
What do you think about the East Coast?
That's definitely where I want to move.
Got that Tupac Biggie, controversy going on. West Coast versus East Coast.
Mm-hmm.
Come down to Miami.
And then Miami, there you go. We got a couple people in here from Miami.
Yeah, there's a lot of people from the East Coast here.
We got Kat. We have we got a Jersey girl, Tiff. But we got Giovanni is a Miami boy.
Mm-hmm.
Got Alex in my group who's a Miami boy who really just ghosted. But I don't know. Some people.
My trailed just hit, so I'm out of the trade as well.
Okay. Cool. Yeah, that's the thing, guys. Like, you got to know when you're grabbing your moves and when you're going to be out.
Mm-hmm.
We know that this is our range. We're not trying to get greedy. We got FOMC. We're not expecting prices to just skyrocket out of here.
Mm-hmm.
We know this is a hard range right over here. And look at the last time price was in this range, or price tapped into this area, right? Boom.
And that's
Just
where
shot
understanding the restrictions come in.
What was that?
And I said that's where understanding the restrictions come in.
Exactly.
Right? If price has told us about 3 times in the past exactly what it's going to do when it taps into the area, you can't expect a different result. Just because you feel like, price is going to head in one direction or another.
Yep. A lot of people from Miami.
Mm-hmm.
Andres, is that how you say your name? I got a couple cousins in Cyprus named Andreas, but it's spelled differently. Okay, cool.
All right, you wanna cover what can they expect when it comes to interest rates now for the rest of the session?
Sure.
All
Want
right.
to go to gold?
Gold and GJ both.
All right. So, what are you expecting over here? Looking at, I doubt they're going to increase rates.
Mm-hmm.
Right?
First, they're going to taper, right? They need to contract their balance sheets and all that type of stuff. These are things that they have said in their previous FOMC statements. So you can simply just go back and just take a look at it real quick. What are some things that they're watching out for? And then just look for that same exact data this month, right? And you're pretty much set.
Yeah, they're not going to take the UK route of just increasing rates. They're going to taper first. And if that's the case, we're going to see a little dump on gold if that's the case.
Mm-hmm. Because then that's one hint that they are leading towards that rate hike in March.
Yep.
Right.
So could we actually be reacting to this key area over here the third time we're tapping into this trend line and tank below 1830 if that's the case?
Yep.
Again, like I said, with right in the beginning of the stream, when they do these things, it's really just like a circle jerk. Like nothing really comes of it. But if they we're creeping up. I mean, we're not creeping up. We are in bad inflationary times, in the worst in like 50 years. So they have been talking about how they're worried about that stuff and they want to start combating it. So I wouldn't be surprised if they do taper today or announce the taper. So if that's the case, you guys want to make sure that you guys aren't really if you don't have experience trading the news, don't jump in. Just wait for the reaction to the news, right? But if you do have experience, you could possibly, I don't know if we're going to be still sitting in this range by 2 o'clock, but you could set buy stops and sell stops below certain areas, anticipating price to break out a certain way, right? Like Sharma, where would you be placing your buy stops and sell stops here? Guessing on either side of the range?
If the market just legit just continues like this, I would first of all, just a disclaimer, I wouldn't do a buy stop, and the reason why is because he would have to manage that trade really quickly, so there's a very high chance that price could just make a massive top wick and come right back down. If you're not there to manage that top wick, you will have a massive losing trade. But let's say you are experienced and you are setting buy stops or sell stops, I would create a buy stop right as when price is passing up these wicks right here. At that point, you wouldn't really have to worry too much about these areas here, but you would target the zone, right? And if I'm looking for a sell stop, then I would wait for price to drop all the way down here, actually, just so we can clear out all these wicks that price has been making, the fake outs, the small candles and wicks and all that type of stuff before the volume kicks in right below this level.
Absolutely. Yeah, guys, it's if you're trading the news, you're gambling, right? Like nobody knows what's going to happen, and if you're going to do that, put some money on the side. If you're going to do it, put $50, $100 on the side, and put that into a different account, and just trade that if you're going to do that. So you're not going to jeopardize your account in any way, shape, or form.
100%. And it's the same exact thing with GJ as well. Price just reacted. It hasn't come all the way back down into that consolidation zone just yet, but it's kind of approaching it, right? So now at this point, when I'm looking at, can you switch to GJ real quick?
Sure.
So when I'm looking at GJ now, right here, it's perfect. So now when I'm looking at GJ, clearly price is doing the same exact thing that we highlighted to the left. That price is tapping into this area, pulling right back down. So if it comes right back into this consolidation, right, and I might just tap into it, then the chances are that there's no trade until interest rates come out, because other than that, price is probably just going to be ranging here. Now it just becomes a huge range. Right, so you want to be very careful when it comes down to your trades. You want to start looking for those confirmations.
Is these a risk to go into a recession? Yeah, absolutely. When you increase rates, typically the market's not going to look too good. If you're going to, let's say, US 30, let's take a look at US 30 real quick. Over here. So I was looking at it when we were looking at teletrader over here. So we've been in this channel, right? Just pushing up since March and April of 2020. Just been pushing up, creating higher highs, higher lows, pushing up. Now we ended up reaching our historical highs up here and just tanking right back down. That's what this whole past week has been, and last week too. Just pushing all the way back down to this support over here. So what's interesting right now is we created that new high. We come right back down. Now we're respecting this support over here. Now looking back at our previous high before March of 2020, COVID's tank, right? We can, even if the market, like let's say they increase rates, right? They increase rates, but at the same time, the market is always going to be basically going up, right? Unless there's some like historical change that like would ruin everything. I doubt that would happen. But what you have here, and that would take the entire system to just completely collapse, and society would go into Armageddon. But what you would have is, don't be surprised if they increase rates. We break this support over here, just to retest the previous lows or the previous highs that we had before COVID, right? And then again, historically, if we hold support at 30,000 over here, right? They increase rates, we hold support at 30,000. We could very well hold support, and that's where the dip is going to be to then retest previous highs, right? Once we go into like a recovery, right? So I wouldn't panic. Once we start breaking below this area, below 30,000. That's where you really got to worry. And honestly, I would be worrying a little bit once we break 33,000, right, for the market as a whole. But again, I think that we could very well be coming back down to 30,000. That's where all the big dudes are going to be getting in and buying that dip. You're going to have a lot of panic. They capitalize on it. That's where the rich get richer, and they take up. So play that hand and be part of that.
I'm actually excited about that because I'm looking forward to it.
Of course, that's what every investor or
Yep.
trader should be looking forward to. You're not part of the majority, guys. You guys know what you're doing in the market. You know exactly what's happening. You know how to read a chart. You know how to predict where price is going to go. You now understand fundamentals, at least at a basic sense. So you know that's where the big players get in and they buy up. When everyone's selling off, they're buying at a discount.
100%.
It's like we're between risk of high inflation versus risk of recession. Yeah, that's the problem because the inflation has been caused by the Fed. So now they got to deal with it, right? All that printing of money is indices, the dollar. All this printing of money over here happened once the Fed. This is March. As soon as March happened, what happened? The Fed started pumping the economy with money, right? So then we just ended up hitting this decline over here. So then what they did, well, they hit the decline over here, and then the Fed started taking action right over here with interest rate cuts, stuff like that. So then, the value of the dollar started going up a little bit. Our economy started stabilizing a little bit, and now we're on our way back up, right? So now, are they going to increase rates? Like, what are they going to do? That's the question you got to ask yourself.
100%. You guys already know, like Stefano said, you guys already know when it comes down to fundamentals exactly what you're looking for and all that type of stuff, right? So just try to use that knowledge. That's pretty much what it is. Even from a technical side, same exact thing. When we go on to what was that? The US 30, when we go into the weekly time frame, that's a massive bottom wick rejection, right? Right into the same exact zone that price has tapped into previously a couple of times, and we've seen a massive bullish push up from there, right? So first it was in June of 2021, then again in September, and then it happened again in November, right? And that's the same exact move that we have going on right now. So you have interest rates coming out today, in a couple of hours. You want to take a look at how price is sitting at a key zone, and are we going to continue pushing down? Is that going to be the catalyst that pushes us down, or are we going to maintain this kind of a range that we have on the weekly time frame?
I was trying to highlight what Fan. How do you say your name? San? I like what you said here. He's got his savings sitting on the side, waiting for the correction to come. So he's just sitting there waiting for his prey, basically. But with that, I think we're gonna head off, right?
Yep.
I mean, I'm not looking for anything else.
Does anyone have any questions before we head out?
Yeah, I do. I was looking at the 30-minute on GJ, just thinking about a re-entry, but then again, I was thinking about waiting for a retest on 154.37 level.
Carlos, did you get the move that we just got?
Yeah. I got that, and I secured profit.
Okay.
I was just like not really antsy on entering again because I'm happy with my trade, but I would, just out of curiosity.
Yes, so I would wait for a break of 154.500, I would say. Like, wait for it to clear this whole zone over here before you take any buys, and then you'll have safer sells once we break this zone right over here. So don't trade in here anymore. I wouldn't be taking anything because, again, like I said, look at the last time we were in this area. We just tanked, right? And we just got a hard rejection right over here. Now, this could very well continue up, but I would wait for safer buys, especially because you just got this move and you were able to secure, you're done. That's your move of the morning. You should be happy with that, right? And plus, we got interest rates coming out too. So I would just sit on the sideline and just wait. If you miss the move, you miss the move. Just journal it. But this is where I would just be content with the move that I got and basically sit out until FOMC later. And then you could possibly grab a move from FOMC, the reaction to it, down later today.
For sure. Thank you.
Of course, man. Is that it, guys? Chat right here. Of course, Cat. Absolutely. You guys, I joined super late. What are you guys looking
4 with the FOMC meeting coming up. Technically and fundamentally, what do you think Powell will cover? Was Becky, Bricky, I think we went over that when you were on, right? Did we cover that?
Yeah, it was in the beginning when we were going through the fundamentals and breaking down GJ and all that.
Yeah, we were also just talking about all that stuff too.
Yeah.
With
so hopefully that
sitting
answered.
press-ups.
Yeah, so hopefully that answered the question. Did it? Just in case, let's just confirm.
Yeah. And yeah, Abraham, you just want to wait for price to break those levels on GBP USD. That range that we're in, wait for price to break that, and then you can take the price off. You can grab your move. All right, guys.
All right, awesome. So if there's no other questions, we're going to head out. Hopefully, you guys understand exactly what to look for when interest rates come out. If you guys have any questions, feel free to reach out to Stefanos or myself on Instagram. Mine is just SharmaFX, and then Stefanos is StefanosFX 28, right?
Yes, yeah, and also a couple other things too. Like, please, I'm asking you if you could just share this. That's all we ask. I think it's gonna, really do a lot for other people as well. But also, if you guys have questions for the secrets of trading, right?
Mm-hmm.
If you guys want us to cover a certain topic, please let us know. And also, if you guys are really starting to turn the corner a little bit and starting seeing things a little bit clearer, please come on. We would love to have you on as a guest and get going. Right now, we are on Spotify. We're working on getting it on Apple. I got to talk to you about that too, Sean.
For sure.
But yeah, that's I would say that's about it. But like I said, please share. It means a lot. Hope you got a lot out of it. And we'll see you guys next Wednesday.
Yeah. Have a good one, everyone. Trade safe, trade smart.
Have a good one,
Thank you
too.
very much. Bye-bye.
Bye-bye.